Welcome to HDFC Securities 5-minute market wrap-up for the week ended 9th February 2024. In key macroeconomic news, RBI kept its key repo rate unchanged at 6.5% and projected GDP growth at 7% for FY25. In the US, non-farm payrolls increased by 353,000 jobs in January 2024. This was the largest gain in the past 12 months. The average monthly GST collection is expected to grow by 11% year-on-year to Rs 1.85 lakh crores in FY25 from Rs 1.66 lakh crores in FY24. China's CPI fell by 0.8% year-on-year in January 24, marking the fourth straight month of decline. Nifty ended a range-bound week down by 71 points or about 0.33%. The BSE Mid-Cap Index managed to close in the positive, ending higher by 1.65%. Among key sectoral gainers, Nifty PSU banks continued the strong rally, ending higher by 5.1%. The BSE Oil and Gas Index, led by state-owned oil companies like IOC BPCL, also closed higher by 3.8%. Among key sectoral losers, the FMCG index was down 2.3%, whereas the private banks continued to fall, ending the week lower by 1%. In select market movers during the week, shares of Trent ended up higher by 20% after the company reported a 124% year-on-year increase in net profit. EIH Limited reported a 52% year-on-year jump in profits, pulling the shares higher by 20% during the week. Shares of UPL Limited fell by 14.3% after the company reported a net loss of 1,217 crores in the third quarter compared to a profit in the year-ago period. Shares of Devyani International also fell by 11% after it reported a 72% decline in year-on-year profit, Rs 18 crores. FIIs continued to be net sellers, selling about 5,871 crores of equities and cash during the week. DIIs, on the other hand, continued to be net buyers, with purchases of Rs 5,326 crores during the week. US markets continued to inch higher, supported by strong results from the tech pack. The S&P 500 was up 1.4% and the Nasdaq Composite was up 2.3% during the week. In this section, we discuss select reports published by the research teams of HDFC Securities. You can access these reports at our website. State Bank of India took a one-off additional provision of Rs 7,000 crores towards pension and DA. Nevertheless, the loan growth was healthy at 15% year-on-year. We retain our buy rating with an SOTP-based target price of Rs 790 per share. Sundaram Finance is facing growth tailwinds receding, but nevertheless reported a healthy AUM growth of 26% year-on-year. The company has seen a 60% valuation re-rating over the past year, which leaves very little margin of safety. We hence changed the rating from buy to add with a price target of Rs 3,610 per share. Cummins reported an exceptional quarter with revenue and PAT rising by 27 and 57% respectively from a year-ago period. We retain a buy rating and have increased our target price by about 20%, Rs 3,006 per share. Trent continues to defy the apparel slowdown. Its standalone revenue increased by 52% year-on-year. The same-store sales growth across all fashion formats stood at 10% in Q3. We have increased our target price by 15% to 2,330 rupees per share, but retain a sell rating given expensive valuations. Our retail research team has published a note on L&T Financial Holdings. The company has taken significant provisioning on its restructured assets portfolio. The management sees minimal impact of RBI's revised norms for unsecured retail product. In the current report, we have upgraded our base case fair value to Rs 190 per share. That is all for this week. Please refer to the detailed disclaimer on your screen. Please note that the securities discussed in the presentation were for educational and information purposes only. Thank you.